Good evening, traders. I'm going to explain institutional play. How the institutional get the liquidity and what sort of play they will do. With the help of my indicator, EP, Episodic Pivot, on the option reflection on the underlying, let us understand the process, what has happened in the market. It indicates clearly in the persistent system. I've taken the example of the persistent system as a clear signs of distribution. It's happening from 21st to till this 6th, 5th of November. It has gone sideways. It has taken so many days 1, 2, 3, 4, 5, 6, 7, 8, 10 days, almost 15 days of trade it has taken for the distribution of the money. Now I'm going to explain you here. You might be wondering, around 9:15, 5,918, that is the level by EP was generated. So I have marked here 5,000. Let me here I believe this is 5,980. The buy EP was generated and you can see the big bar closing. This itself in volume spread analysis, it says buying climax. Once buying climax is seen, it takes nearly 20 bars to get, 20 to 25 bars for the market to come down. It is an indication of, according to the volume spread analysis, it is an indication of buying climax. Huge volume, the price is closing near the middle of the, see, if I take the measurement of this candle, see, the price has closed near the middle of the candle. That is clear indication of buying climax, exhaustion, and this is an indication as a candle wise. And the confirmation wise, you can see the same day after triggering, the people might have entered into the trade, indicating this as a breakout. Breakout from the range, people have entered into the market. Right? Then the price started coming down, closed near the bottom. The close is around 844, 5,844. This is the level. It has closed near this level, 5,844. Next day, this is the bullish EP was generated with high volume by the intention of the big player to offload. You might have seen the news event might be triggered on that day. Some sort of news might be triggered on that day. In the media and everywhere, some news will be flashing, and they push the market like this and then close near the bottom. Next day, it is a gap up. It is a long dozy candle formation, and then closing near the bottom. Again, when 2 days of closing near the bottom, it induces sellers into the market. Sellers are nothing but, who are they? The sellers are retailers. Small players enter into the market taking the bearish stance, keeping the stop loss over here just little bit above, and they will enter into the enter into short position. And the third day also, it closes near the bottom. The close is near 830. So the consecutive close of 3 days near the bottom. Closing near the bottom, it should have continued towards the down move. Instead of that, see the institutional play. It a strong bullish momentum. They pushed the market. It was a trendy day from 5,827 to 5,961. Who can imagine? Trapping all the, sweeping all the liquidity, swallowing all the liquidity, goes there, and a momentum shift has happened. My rolling pivot indicator is indicating exhaustion, and the narrow range bars were simultaneously formed. Okay, they have swept everything. The people who have gone long again, thinking that it is a second attempt breaking above that, they have got trapped over here. Even the rolling pivot, see what it does, it is coded for the bullish. When the price climbs above the pivot, when the and the can halo turns, definitely you enter into a bullish position. But you need to be careful. You need to see the left side of the market, what is happening over there. This is an example of institutional offloading the market. This is nothing but wake off distribution, or distribution is taking place. Later, after swallowing all these stop losses, buy stop loss, this is the breakout stop loss. The breakout traders will enter into here. Immediately you can see the big bull bar. It pierces through that level with the bull bar, and all the people thinking that it is a breakout from this closing price 5,919, they keep alert, they enter into immediately they enter into the trade. Their stop losses will be around this area. The stop losses will be the trader who enters into the market, their stop losses will be little bit beneath or here. You can see the next day the market plummets with a huge big wide range bar. It comes down, sweeps little bit of liquidity over here, and sweeps the liquidity of the retailers, breakout traders, and it goes up. See, this is a process. This is a time consuming process which is happening over here. Now, at present, this is the reference. Bearish episodic pivot is the reference. It is telling that 5,883.27, the price is not above, not reclaiming this level. So, bears are dominating. This is an institutional gimmick play that is going on, and now this level is my reference point, and you can start thinking about the put option over here. It suggests 5,800 put option. Let us go and see what has happened in the put option, whether bullish sentiment has been generated over here. Any big institution is accumulating that put option. Let us see. If I see there, you can see very clearly there also this type of on 27 and 27th. You can see the bullish and bearish behavior it's taken place. Now bulls have taken control. This is the climax. So here from the level of 84, 85, that bullish sentiment has been triggered. It says that 138 is bearish and 139.75 is bullish. So let us mark the 138. This is the level both bears and bulls are active. So if the market reclaims this level, starts moving above, suppose underlying starts gapping down, then you will get a huge profit in this. It may even go up to 221. This persistent system. So you can keep it in your watch list with my rolling pivot reversal magic indicator. The trend has changed. Trend has flipped over here to bullish. And the last while closing, this is the first hour. I think it is first hour, 10:15. This is the first hour, 9:15, 10:15, last third hour, 11:15 to market has gone sideways. It has gone sideways. Compression, it has taken place. Probably what they can do is they can do an expansion, bearish expansion like this. If the underlying gaps up to that level, then you will get a discounted price, and watch this because already bears are in action. The market has swept the liquidity. So it is preparing itself for the down move, and closely watch this concept and closely watch the price action. Then you will get an edge. You keep it in your, all of you keep it in your watch list. Observe this with the indicator, rolling pivot, reversal magic, and this episodic pivot. You can create wonders and you can bring in profits into your home. So I have explained this. Let me go to the same put option, 5,800 put option. Let us see what is happening over there. This is put option. Okay, sorry. Let me go to the 5,800 call option. Let us see what is happening over there. It is suggesting 261. Already it has fallen below this level. 261. Now it is around 187. It can decay and it can move downwards. The price can move downwards if you go to the reference level, historical level, that is the level 183. Once it starts moving below the 183, that is a confirmed thing that the persistent system is going to go down. You have to track both the call option and the put option and make your decision, and you can understand the Wyckoff distribution pattern very easily with the help of this episodic pivot and rolling pivots. It is a difficult part for any trader to understand what is happening when the market goes sideways, whether the bulls are in control or bears are in control. So I tried to apply volume profile to this, and you can see it has lost its point of control and it has closed below this. Let me go back to the 5,800 call option, put option. Let me check whether the point of control is there in the market. Let me apply from the here. Here, the price has moved above the point of control, POC. POC and BO. So 105 is your reference point, POC. You can consider and you can keep a watch there. And any reversal and climbing above this 153, you need to simultaneously keep an alert on your chart to track this. Same thing you can notice. I have noticed the institutional deceptive way to track the retailers in the market. That is, I am going to the stock, State Bank of India. Let me type in State Bank of India. State Bank of India. Let me go to the chart. See here. In this table, it is suggesting that on 23rd, bullish EP was generated, 940. And next, after that, the 24th, it was generated on 23rd, and 24th was a down day, and 27, you can see bearish EP was generated. What can you understand about it? This will be a confusion. But all the things will be solved with the help of my rolling pivot. The trend is intact. You can see with the rolling pivot, let me draw a line over here, trend line like this, trend is intact. In this area, the market was playing a gimmick. Why this sort of behavior ways? The market was rolling to the next contract in this way actually. So bullish EP was generated at 914 on 23rd and the price closed near the bottom. Price closed near the bottom on 24th. Sellers have been induced. Stop losses of sellers, retailer traders thinking that market is going to go down, they have entered into the market. Many people enter at last hour BTST trade they will take. Can you see the next day it gaps up. It gaps up to the level of 900 and first hour itself it reclaims the 914 and goes up to the 990 and a bearish EP was generated. Episodic high volume has been generated at that time. You can see the triangle marking down and making the people to confuse. What might have happened over here, the the institution which has taken this bullish, position here, he has shaken out all the weak buyers because this is a gap up. When it gaps up, the latest traders might have entered into it and see the same type of persistent system, same type of scenario you are seeing over here. And gap up and it is coming down, closing near the bottom. Next day it is reclaiming that level around 917 to confuse the people, bearish episode. What could have happened means the institution might have here, institution might have, hedged their position with put buying, strong put buying. This is the institution which has taken this position. They might have hedged their position over here. You can see the next day on 28th price moves above this level, bearish episode. So you will enter into it, even the episodic pivot, by seeing the episodic pivot, you enter into it, and the second hour and third hour, the market plummets. That is London session. London session manipulation has been done, and then price reclaims above and closes at the top. Next day, it is a continuation, consolidation for 2 days, and now the price has moved up. Still, the trend is running. The price is hugging near the this one. Any discount, we need to see what the price is doing. Only when it starts coming below this, then bearish stance can be taken in this. So it is an event based move. You can see earnings was on 4th November. On 4th November, first they plummeted and they pushed the market higher after the indicating that it is generated a very good revenue and profit margin is good. So this is the institutional thing you can do. And finally, before closing, I'll take you to the indices Nifty chart. What has happened? You can see over here. Same distribution happened in the Nifty because it is an evidence that market has come down. Same type of behavior as seen in persistent system. See the thing. Bearish EP, this on 20th, an EP was generated here. That was on the, I think it was Deepavali day. They started offloading. they induced sellers and EP, and they gapped up. Gapped up with the news. You all remember there was an holiday and the price gapped up to huge. You can see huge. If I say it was a huge move, why it is not picking? Yeah, huge move of 210 points. And here, last hour, sellers have been trapped. These are it has closed near that, and you can see 273 points gap up opened. And a bearish EP was generated on the same day also, because it is indicating triangle. And then price came down close near the bottom. Same type of, and it did not go to this level. It stopped here, inducing fresh sellers into the market. And their stop losses were here. This is an inducement. Stop losses were here, and it induced both the buyers. On 29th, you can see, and these are the breakout traders. They keep that this is a breakout from the 28th breakout, the range. Usually people, breakout traders, become active. Here it came down and it went up. It presented it as a, presented it as a trend day up to 1250. Manipulation started only after 1250. And the price started coming down and it started showing its color. And the bearish EP was generated on 27th. You can say 27th. Where is the 27th? At the price of 25,996. When the price started coming down on the 30th October, it is a clear indication that the price is going down. You can see so clearly my rolling pivot turned red, and this one GAN Hilo also turned red. From there is no look back. This is the clear example of institutional play. This is how distribution takes place. Subtly, silently, trapping the liquidity, sweeping the liquidity, everything happens in the market. It is still continuing downwards, and the price has moved. Price has moved here. It has come down to this level. And if you go back to the history, there are so many EPs are there. We need to see where the institution is entering into the market. We'll get reflection. There, at the time of reversal, you will get reflection at the call option. When it is confirmed, you can, maybe around midweek of the this month. Already it is 5th of this month. Next week, probably market may find its fate. Again, this type of accumulation going sideways, and you can get see bullish EP. Bullish EP you can see there, and price coming down, inducing traders and trapping the liquidity, inducing, sellers, and then reclaiming the EP level and price rallying. Same. You can see the same thing what has happened in State Bank of India. Around 13th and 14th market reversed, same pattern in a different way which has happened in the State Bank of India, which is mimicking the same thing. This is an institutional traders. That's how I made this video for you people to understand episodic pivot. This is a very beautiful indicator reflecting the institutional activity after a long run-up imbalance. This type of activity will be seen. So traders, you need to be cautious and you need to wait. Only after the confirmation. This is the confirmation. when it was not bearish EP was confirmed with the down move, with my rolling pivot, you could have taken a put option. For example, if you would have taken a put option on the, let me go to the put option on the 11th, because we will not be getting the data. 25,996 means 26,000 put option. If you would have taken position over here, same behavior, it has been mimicked over in the call option. Finally, it has reclaimed on 30th October. There is no look back. You can see my pivots are green, stepping up. Only in between it has come down. That was yesterday. They trapped and they made it very cheap. See, it rallied from, you can have a positional trade from 146 to, it is running up to 425. Yes, traders, you could have taken this put option with confirmed bias, with conviction, with my rolling pivot, reversal magic and Gan Hilo, the trend is confirmed. You could have taken this. You could have a positional trade 1, 2, 3, 4, 5 days, it would have fetched lot of money. Or it is a boon for a uh, call writer who would have written this money. It might have become peanuts. 26,000 call option. Let us go and check. It might have become peanuts. It is a delight for the people who have written the call option. See, they have written the call option. The person who has written the call option around 321, it has become 22 rupees. So cheap. It has come down to the bottom. 26,000 call option. For a writer, it is a boon actually. They could have written this call option by seeing the EP, and they could have. See, it is mentioning 399 is the buy EP here, 399. And after all the drama, and the final EP on 27th was 321. So if I bring this, it comes to 320, 332, when the price could not go above this 321 here. Approximately I'm applying. It's a confirmed, it's a next day is a breakdown. Breakdown continuation of the trend move. This is how you can trade, traders. As a retailer trader, you can also make money. Do not enter daily, day-to-day trades can get trapped, and because they trap it. It will go up and you will get trapped. You think the market is going up and you enter into call option. You should not go get trapped over here. See, you can see this call option on 15th last month, October 25th. It started its move from the peanuts, that is 68 rupees. You can see over here 68 rupees. It rallied up to 403 rupees, 390. Now they are offloading it. They are offloading this call option. If you go to the monthly, you can see for that. So friends, with this explanation on the EP, you must have a clear vision of the price action. You must know what is Wyckoff accumulation, distribution, what will happen in the market. So to educate you people, I have done this video. So friends, if you want to access this indicator, you can message me on my WhatsApp number 98452096000. The number will be provided in the pinned comment. You can get the number through that, or otherwise it will be in the description. Thank you very much, friends. My WhatsApp number is, again, I'm going to write down 98452096000. It is a paid indicator. Only genuine people can contact me. No fake things. Thank you very much.